Recording in progress.
Some students will be outside. You can call them. Just here only. Okay. Yes. Yes. Good evening, guys. I believe I'm audible. Yes, I think that's it. Okay. They have come. All right. So let's get started with this week's current affairs for economy. So the first thing here is IRDAI, that is Insurance Regulatory and Development Authority of India. They have done a pilot project of Bima Gram API. What is API? Yes, it's an application interface basically. It's like an app. So that app, it's a prototype, yes. Prototype, you can say API or APK. APK is what? APK. G. Basically it is basically the Android platform kit. So it's a kit for the Android platforms that is there. Before coming on to the Google apps, you can generally have an APK. So let's say if I am preparing an app, so first the APK will be prepared. It will be the entire Android kit which will function similar to the app. And then finally it gets transformed into an actual app, that is the API. Now this API was a pilot project was being done which has been completed by IRDAI. Pilot project as in before you implement it throughout India, you have to do certain pilot projects in order to understand how is it working. So that pilot project has been done. So we will see what let's say what will be the consequences once it gets implemented. If you even don't know it, what simple thing you can understand it, it will increase the penetration of the insurance, it will help the companies to realize the insurance premium easily, to claim for their insurance easily, all those benefits will come out of it. So we will see that. Next is the floating rate bonds. The floating rate bonds. So we know bonds are what? They are debt instruments. They are debt instruments. Now these debt instruments, they generally have a fixed yield. That means a bond of, let's say, 8%, right? However, there are certain floating rate bonds. In fact, your inflation index bond is similar to a floating rate bond only. Inflation index bond is what? You are getting CPI plus 1%, for example. This is inflation index bond. So this rate of return will keep on floating. If CPI is 2%, rate of return is 2 plus 1, 3%. If CPI is 10%, rate of return is 10 plus 1, that is 11%. Right? Now, in the same manner, there are other floating rate bonds whose rates are pegged to the national savings certificate, right, or the treasury bill of the government plus 35 basis point. 35 basis point means 0.35%. So the bonds whose rate is fixed at national savings certificate rate plus 0.35%. So or the treasury bill rate plus 0.35%. So with the change in those rates, the rate of yield of these bonds will also change. So that is why they are called as floating rate bonds. Their rate of return is not fixed. They are now in high demand. A lot of people are going for that. We will see why that is the case. Next is the DP rules of 2025. Now this is going on since a long time. The final draft of it has come, is being now being implemented. In that, what they have done is they have separated. What they have done previously is they considered the persons with disabilities or the specially abled persons, they clubbed it with children. Right, that was a huge blunder is what you can say. They clubbed it with children and they treated the persons with disabilities as children. Now in this final rule, they have separated the section of persons with disabilities and separated it from the children. That was a thing which was required. Why? Because persons with disabilities have different kinds of disabilities. Of course, someone can have, for example, autism. Someone can have, inadequate development of their brain or their sensory organs, wherein they are not able to take decisions on their own. So, of course, they will need guardians to take decisions on their behalf. but someone can have locomotory disability wherein they are having a issue with movement, with walking, or with movement of their hand, or they don't have a hand, or their limbs are disabled, wherein the cognitive ability is fully there. So in those cases, they don't need guardian as such to take a decision for themselves. So depending upon the disability, you have to give different benefits or different provisions for differently abled people. Previously it treated everyone as homogenized group of differently abled people. Now they have separated it. So we'll see that this is a good step, but however some steps still are going to remain, some issues still are going to remain. We will see that. Next is the Pradhan Mantri Fasal Bima Yojana. Now in Pradhan Mantri Fasal Bima Yojana, what they have done is they have expanded the cover for covering the damage done by wildlife and the paddy inundation. Now remember this paddy inundation concept, we'll see what is this concept all about. This was there previously in Pradhan Mantri Fasal Bima Yojana. When this Pradhan Mantri Fasal Bima Yojana came in 2015-16, this paddy inundation was present. In 2018, they took it back, and now in 2025, they are introducing it again under Pradhan Mantri Fasal Bima Yojana. As far as wildlife damage is concerned, wildlife damage was determined from region to region. Right, in certain region, if there is a lot of prevalence, your insurance claim under wildlife damage may be allowed to you in those regions only. In other regions, it will not be allowed if the prevalence of wildlife damage is not there. But now a pan-India application of insurance you will be provided if there is wildlife damage. Is that clear? So that is the concept. Then the next is the tier 2 bonds. So tier 2 bonds, tier 2 capital is a capital which is going to be more riskier capital. It is the undisclosed capital. So you are coming up, we will look at the concept of the tier 2 bonds also, what they are. Okay. So let's start with the very first thing, the IRDAI, which completes the pilot project of Bima Gram API. So what is this Bima Gram API? It is basically nothing but like an app. Now let's understand why this is required. See, if you have an app which is universally available to all the Indians for making any kind of bima that you want, life insurance, general insurance, health insurance, if everything is available at your fingertips, you can easily get it done. You can easily get it done. So India wants to, we have a target of insurance for all. We have a target of insurance for all by 2047. This is our target. Presently, insurance penetration is quite less. Very few people are actually covered under insurance. We need to increase it. Now, how we can increase it? Facilitate people to purchase insurance. So for that, the IRDAI itself is going to come up with an app through which a lot of things can be done. First, you can buy the insurance. You can make claims of the insurance. Now, because everyone will be linked with that insurance app, the data will be available to the companies also. When the data is available to the companies also, insurance is all about calculation. They can have accurate calculation in calculating your premium so that they can also assure their functioning, their profits, and they can also come up with the best possible premiums that are there. Data dissemination will be possible, there will be ease of getting your claims also done because everything will then be digitized. Now, to implement that first, they did a pilot project, because in pilot project, you have to check a lot of things. This pilot project is not to see whether this is a good step or not. It's not that kind of a pilot project. The pilot project that was done for, let's say, for example, universal basic income. Pilot project for universal basic income in the state of Madhya Pradesh was done in order to check what are the repercussions of this. Right? Will it lead to increase in inflation? Will it lead to more wife beating? Will it lead to more drunken nature of the person because the money is going to the household? What is the kind of expenditure this household is doing? Is it leading to any improvement or not? Or is it better to give subsidies in kind rather than in cash? To understand all the socio-economic impact, whether it will be good, bad or ugly, is what you did the pilot survey over here. But here the pilot survey is done not to ensure whether it will be good or bad, but to check that all the services are integrated properly or not, all the system is going to function properly or not, what is the ease of making a claim over there, what are the challenges that the people will face. So to understand all the administrative and application based issues, this pilot project was done. Every company does that. So if we have an app, so if we want to launch an updated version, before that we will check it through the APK. The owners, the founder will try and use it for 1 week, and then they will see what are the issues, then they will tell what are the changes that have to be made, then those developers will make those changes, and only then the app will go live. Since the institute is a small entity, only 15-20 workers are here, so only 2-3 people are using it. Since nation is a big entity, you are doing it for the entire India, that is why you will do a pilot project. Is that clear? So that is the idea of pilot project. What does its aim? Aims to expand the insurance penetration, especially in the rural India. Yes, so this is Bima Gram. Bima means insurance, Gram means basically the rural India that we are talking about. So what is this? Application programming interface. Bima Gram API basically is a digital platform, application programming interface. It will enable what? Real-time authentication, real-time mapping, real-time verification of insurance policies. Because it is real-time, what happens is the delays are avoided. The delays are avoided. And if you want to make a claim, let's say there is an insurance claim that you are making. Take for example Pradhan Mantri Fasal Bima Yojana. Your crops have failed. So now since your crops have failed, what do? You have to submit the evidence. You have to submit the picture of your crop, of your farm, which has been failed, which have been destroyed. So you click a picture, the picture is geotagged with the exact same coordination. So the coordination will be on the piece of land that belongs to you. So a geotag picture goes over there, it helps in providing you claim in a faster manner. Or else what would have happened? You have to apply for it, someone from the insurance company will come, they will check it, they will ascertain it, send their report, then the report gets approved, then you get the claim. Right now all the evidences are submitted. If they find yes, anyhow we know the hailstorm had come in that region and this claim is also genuine, let us approve it. So out of the 100 claims, maybe only in 10-15 cases they would be required to actually send some investigator to investigate. In other cases the claim can be processed completely online without anyone's intervention, so it will make the process faster. Okay. This is something about the pilot project. You don't have to go into much detail because they will not going to ask you the pilot project, but you should know when the pilot project was conducted. Life insurance was present, general insurance was present, health insurance was present. These are the 3 main types of insurances that are there. Life insurance, basically if someone dies, what is the amount that their beneficiaries will get. General insurance means you have the crop insurance is a type of general insurance, the vehicle insurance is a type of general insurance. Everything else other than life and health is basically coming under the general insurance. Then the third is your health insurance that is there. So these are the insurance that we are talking about. If you look at the Western world, in Europe and developed countries, there are a lot of things that they insure and they have a very high claim. People have insured their feet, their hands, their voice, everything. You are a singer, you insure your voice. If something happens tomorrow, you are not able to sing, you are not able to speak, you will get millions of dollars in claim. You are a footballer, you insure your left leg, you insure your right leg. You get injured, you are not able to play. So now what? The insurance will give you the claim. Okay, we are not yet to reach at that level. We are still struggling with life insurance and health insurance. How many of you have health insurance? 1 and 2, that's it. 3, that's it. 3 people. No, even I don't have life insurance. Life insurance, health insurance, I don't. Except for my car, there is no insurance because car, you go, they will challan you, so you have to keep it. Anyway, so there is a need for all these kind of insurance that is there. Significance of the initiative, the usual significance, it's going to create efficiency, accuracy, because it is digital, it is going to arrest the leakages, it is going to make the system more transparent, the usual thing. Anything which gets digitized is going to have the exact same generic benefits. But of course, being specific to the case, you can talk about faster reporting, faster claim realization, faster transfer of money, online transfer of money, less leakages. ठीक है. Another thing is, yeah, this is important, data mapping. Data mapping is important. Because of it, you will have a centralized data pool, and this centralized data pool is going to help a lot. How this data is going to help? Because insurance is basically a back calculation. Back calculation means, how do you calculate the premium of any particular insurance product? You will first calculate how many people are going to buy it. Let's say 1 lakh people buy it. Out of them, how many people are actually going to have that event in which I would be required to pay them? So let's say out of this, let's say 1% people are going to have that event. That means 1,000 people are going to claim for it. How much is the limit of the insurance money that they can claim? Let's say 10 lakh rupees is the insurance money that they can claim. So 10 lakh multiplied by 1,000. This is the amount of money that will go into claim. Okay? So 10 lakh into 1,000. So this is 1 crore, 10 crore, 100 crore. Right? So this is how you calculate. You multiply it. Now this is the amount of money that you have to recover from these 1 lakh people. Is that clear? Plus you have to include your profit, your costs, your administrative and operational cost, plus profit, plus the claim that will be made. So once you add all this, you get the final amount. Okay? You get the final amount. Let's say the final amount is 1,000 crore rupees is the, or let's say 100 crore rupees is the final amount is what you get. So you divide it by 1 lakh. Right? This will be the premium. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So 10,000 rupees should be the premium that you should be charging to the people. So 10,000 rupees premium per year comes out to be, let's say, 1,000 rupees of premium per month. So it is basically a back calculation. If your calculation is fine, there is no way that you can have a loss as such. Okay? So this data is going to be beneficial for the industry, for the companies also, to come up with the most accurate premium that is required. Policy planning. The government can also plan their policies accordingly. Digital inclusion will be there. These people will be digitally included. This will help the consumers also. It will help increase the penetration of insurance, specifically in the rural area, because there is very much ease now for you to start a policy in insurance, for your insurance policy. Yeah, there is an ease of doing that. Right? There is easier verification, there is easier transfer of funds, as a result of which it will increase the penetration. More and more people are now going to use it. Is that clear? Any questions? Nothing? This is a risk management matrix generally used in insurance sector, even in any sector. I have mentioned in one of my classes actually. So how do you assess the risk, the severity and the likelihood of it? So the likelihood, when it is very high likelihood, very high severity, it has the highest amount of importance. The severity is very low, negligible. The likelihood is also very low. It has very low importance. So the risks which are very high are attacked first by the organization. The risks which are very low are taken care of it later. This is how you do basically the risk analysis. Okay, let's come on to the floating rate bonds. Floating rate bonds. So floating rate bonds, like the floating interest rates are there on house loans or any kind of loan. So if you have a loan, if you have fixed rate, that means if your loan is having 16% of interest rate, throughout its time period, it will be charged at 16%. But if it is a floating interest rate, what will make this floating? Yes. So it has to be related to something. It has to be related to something. There needs to be an underlying element over here. So that underlying element is basically the repo rate of the RBI, the repo rate that is given by the RBI. So this 16% is the fixed. This is going to be dependent on the repo rate. So this will be, let's say, repo rate plus, let's say 10%. If you talk about the personal interest rate, personal loan interest rate. So repo rate was 6.5% and this 10% addition, so this gives you 16.5. But then RBI reduced the repo rate 3 times, a total by 1%. So then repo rate become 5.5% and 10% which was additional. This additional consists of additional cost, operational cost, administrative cost, profits, NPAs, everything is included in that. But since RBI reduced it, so now you will get it at 15.5%. That means this interest rate keeps on fluctuating, floating, depending upon the repo rate that is there. Is that clear? In the same manner, in bonds, you can have a fixed rate or a floating rate. So fixed rate bond is going to give you a fixed yield, fixed rate of return. So 8% is your rate of return. But now the floating bonds have become prominent. So what they have done is they have kept the yield as a floating yield. How is that yield floating? They have added 35 basis point. 100 basis point means 1%. So 35 basis point means 0.35% over and above the national savings certificate that is there. This is one example. So now what you have done is you have made it floating. Floating means whatever is the rate of return of the national savings certificate plus 0.35% is what you will get. So if national savings certificate is 8%, then you will get plus 0.35. If national savings certificate is 9%, you will get plus 0.35. Right. So the ones that are prevalent right now is one is linked to the NSC, the other is linked to the Treasury bill of the Government of India. Treasury bills. Treasury bill, they take an average of the Treasury bills of the last 182 days. What has been the rate of the Treasury bills? You take that average, you link it with that. So if the Treasury bill is giving higher return, your bonds will yield a higher return. But the reverse is also true. If the Treasury bills is yielding lower return, your bond will also give you lower returns. Okay, is that clear? Now, the question is, why? Why are they becoming, yes. So, as I said, this is one for retail FRBs, NSC rate plus 35 basis points. This is average yield of the last 3 182-day Treasury bill auctions. So, last 3 Treasury bill, last 3 182-day Treasury bill which the government came up with, what is the average of the last 3 such Treasury bill? It will be related to that. Okay? So it can be related to any particular instrument plus over and above some percentage or directly linked. If you don't give anything over and above, then also it is floating only because it is changing or fluctuating based on its underlying commodity, like the derivatives. Derivatives are going to change based on the underlying commodity. So here also the interest rate will change. Okay. Now the question is, why are they in demand? They are in demand. See, you are getting more than the national savings certificate also. So the bond is yielding you more. So you will go for it more. If you look at other instruments that are present, there is going to be a higher risk. That means there is going to be a volatility in that market. In the equity market, in the share market, you will face volatility. Volatility means the share may be up today, it may be down tomorrow, right? This NSC is quite stable. Treasury bill is quite stable. It is floating, but the risk is not that high for the NSC to go down. Whereas the risk is very high when you talk about any equity share or other risky instruments. So you get some amount of stability, you get some amount of assurance, at the same time you get some amount of additional percentage also. So comparatively, so instead of, let's say, investing your money in fixed deposit, which is yielding you what, 4.5%, only if you go for 18 months and beyond you get 5.5%. So instead of that, all that money, instead of that, you invest in bonds, which is going to give you a better return. So that is why people are inclining towards these floating interest rate, floating coupon rate bonds. Okay, clear? Any questions? You understanding everything? Very good. Next is the DP rule, Digital Personal Data Protection Rules. Digital Personal Data Protection Rules. Under this one major, see, they have, this is going on since over a decade and a half. This DP rules will come, new rules will come. In 2016, the government came up with a draft. Then in 2023, they wanted to change, and then they have taken the opinions of the public also, the standing committee, the public, and a lot of opinions the NGOs etc. have given, and now finally that is being coming up under the rules of 2025. So one major thing that has happened is in that the person with disabilities, they were clubbed with the children. Now since they were clubbed with the children, they were treated as a group of children only. So children require guardians' approval. So persons with disabilities were also supposed to have the approval of the guardian. And these persons with disabilities were considered as a single homogeneous group. Whereas there are n number of types of disabilities that are there. People can be differently abled, disabled, however you would like to call it. But at the end of the day, there can be people with disabilities but still capable enough to take their own decisions. Calling them similar to child and asking them also to mandatorily have the approval of the guardians is stigmatizing them even more. Is that clear? So they have now separated the person with disabilities and the children separately. That is why this is in news. Okay? So what had happened is the disability right groups, they had objected to the previous draft rules that were there, which basically clubbed persons with disabilities with the children. For what? For the guardian based consent. Now it is sometimes it is quite difficult to understand when you have the bureaucrats who are framing the rules, who are involved, such intellectual minds. How can this even be possible? Okay? How can you club everyone so homogeneously? Maybe because you think, okay, some of the persons with disabilities may need the guardian's approval, maybe they have lack of cognitive ability, but then there are so many with locomotive disorders, so on and so on. People are giving UPSC exams, clearing it, becoming civil servants also. So everyone does not need that thing, right? Anyway, it is finally happening now. Okay? So what is this DP Act? It is basically the data protection. It talks about the data protection. It also consists of, what right it consists of? It also consists of right to be forgotten. What is right to be forgotten? Yes, tell me. Yes. So, that is one important point. You have the right to be forgotten, but it has to be initiated from your side. What is right to be forgotten? Also, you know, we share our Aadhaar details many times, right? So let's say we have shared Aadhaar details for a phone connection, SIM card connection. Now, if I have shared my Aadhaar details with Airtel for SIM card connection, they can use my Aadhaar detail only for that intended use. First, it cannot be used for anything else. Just because I have given them my data, they cannot sell that data. They can use only for verification for giving me my SIM card. That is one thing. Secondly, many a times you are required to give your details. Required to give your details in police verification cases also, in police cases also. If you are a suspect, for example, your detail is also required. Now, when you give the details, so a lot of details of yours is stored, so you can request for deleting the detail which you have given to the police because you were a suspect, because now you are no longer a suspect. So on case by case basis, your data can also be deleted. That is known as the right to be forgotten. It has a lot of other things. One thing that it has talks about storage of data within the boundary of India by the foreign companies. So if you have Google, WhatsApp, etc., they have all the data of Indians. So India will ask them to store Indians' data within the boundary of India. Now how is that possible? It's a digital data, right? So how can we ask them to store it within India? The servers will be within the boundary of India. This digital data at the end of the day is stored somewhere. So it is stored in the cloud. That cloud is what? That clouds are the servers. So that those servers has to be physically present within the boundary of India. Right? Those kind of rights are there. So you should go through the entire act in detail. We will for now just focus on the issue with the disability, a person with disability. So what was the core issue? The PWDs, they are not a homogeneous group. Many can manage their own digital interactions. They can give their own consent. They can deny them things on their own. They do not need the guardian's approval, right? So they should not be considered as the homogeneous group. So equating disability with incapacity, yes, this is important, right? They are equating disability with incapacity in decision making. That is not necessarily the case. You may not be able to move, you may not be able to, visually impaired you might be, but you can still take your own decisions, right? So that is what the issue was all about. This is the timeline of the DP rules that was there. 2011 panel set up to examine the privacy risks. Then 2017, this is Puttaswamy judgment, we know, declares privacy as a fundamental right, Puttaswamy case, 2017. 2018, BN Sri Krishna Committee formed to draft India's data protection framework, BN Sri Krishna Committee. So remember this committee's name for your prelims. 2019, personal data protection bill introduced but sent for deeper review. So it has been over half a decade that it is still going on. Then you have recommends Ministry of, what is this? Ministry of Electronics. Okay, basically MeitY it is. So talking about recommending the privacy framework. What should be the privacy framework? Because we are talking about the privacy in the digital domain. Okay. Then you have the draft rules that were released for public consultation. Right, draft rules that were released for public consultation, asking consultation from the public. So you can individually also respond, you can respond as an organization, as an NGO to hear the public voices. So whatever the concerns were raised, now the final DP rules are out. So this is a good step which the government of India has done. But there are still unresolved issues. Okay, unresolved issues. Unresolved issues as in, see, the most important one is this. There is still ambiguity in guardianship law. What's still ambiguity in guardianship law? They have separated the child from the person with disabilities. But, so now they are treating this person with disability as a heterogeneous group. But the question is, still some of the people who are persons with disabilities may require the guardianship. Right? People with inability, cognitive inability. People who might be with autism, right? So they will require guardianship. So it is still not clear who will require guardianship, that is one thing. Secondly, the requirement of guardianship will be addressed through the National Trust Act of 1999 or RPD Act of 2016. This is the Person with Disability Act of 2016. So will this act decided or this act decided? What is this act? National Trust Act. It basically deals with people who are having autism, cerebral palsy, etc., who have a stroke, who have inadequate development of the brain. So this act deals with persons with autism, persons who, the children who might have a stroke, the person with people with undeveloped or you can say underdeveloped cognitive abilities. Underdeveloped cognitive abilities. So will these PWDs be clubbed in over here, or will these PWDs have guardianship requirement based on RPWD is still not made clear by the government. Okay? So this issue is still going to persist. Is that clear? Incomplete operational guidelines is also there. The issue of verification of the guardian identity and status. So first of all, do you need someone as a guardian? Second of all, who all can be a guardian? Can a friend also be a guardian? Right? All those things are still quite ambiguous. See, when it comes to medical health or anything, it's just simply that they ask for whoever is the son, daughter, husband, wife, mother, father, fair enough, it automatically takes place. But here, over here, in terms of when it comes to digital privacy, who will be their guardian? Someone who is an orphan, who does not have anyone. So can a friend become a guardian? Can a neighbor become a guardian? So all these details, and what will be the method of verification of those guardians? What are the documents that will be required for the verification of those guardians? Nothing is still clear. Why we are saying nothing is still clear? Because please understand, these are rules. So So rules has to be very clear. If only the act would have come and the act says that we will identify the guardians under this act, so we can be quiet at that time. Why? Because act will just talk about what is going to happen. Rules are the things which actually tells us how it is actually going to happen. So even when in the rules it is not mentioned, that is an issue. Is that clear? Even when it is not mentioned in the rules, that is the issue. Because rules are the things which specifically tell what is allowed, what is disallowed, and what you have to do in what circumstances. Okay? This is also important. The issue would be treatment of persons with psychosocial disabilities whose capacities may fluctuate from time to time. Now this is a very practical issue that might be there. So psychosocial means, see what happens is some of the people, because of the stroke for example, right, their cognitive ability is hampered. But it is not that their cognitive ability is hampered for perpetuity. Only for certain time, temporarily, their cognitive inability will be there. They, because the stroke was there, the veins were very squeezed in, so blood flow was not there. Since the blood flow was not there, the stroke was there. So incapacity of cognitive ability. Now these people actually can make their own decisions through the daily course of their life, but at times their capacity may get lowered. How it can get lowered is, some of them would be on continuous medication. I am just explaining. In answers you don't have to write. You just writing this is more than enough. But they are on continuous medication. They keep on taking the medication of thinning the blood thinners, all those things, they work fine. They don't have money, they're not able to take the medicine, they're not able to take proper care, their cognitive ability may be lost. They start taking the medicine again, their cognitive ability is returned. So what is happening? The cognitive ability is fluctuating. So in such cases, what do? Do you have a guardian or do you not have a guardian? Now the answer would be, let me have a guardian. Once you have a guardian, your own decision making is now completely with the guardian, right? So what is happening is, this is a very practical thing. The solution for this might be very difficult, right? The solution for this would be very difficult, because every now and then you cannot register, then unregister the guardian, then register the guardian, then unregister the guardian. So this is a very chronic thing which may still remain after the passage of these rules also. Okay? So what is this? The treatment of persons with psychosocial disabilities whose capacity may fluctuate. So social means related to their mind, because of which their behavior in the society is completely changing. Now, what is the way forward? Provide a detailed guidelines of different kinds of disabilities, up to what level or what kind of disability guardian will be required, not required, under which act it will be required. Better would be probably to put them under the PWD Act only rather than the National Trust Act, because National Trust Act specifically deals with autistic. Now autism basically generally in the children, but yes, you can put in there also, but wherever you are putting, you have to be very clear with respect to that. Okay? Supported online guardian verification. Okay? Online guardian verification should be there. Amendment, okay, rest of it is not that important. Clear? Any questions in this? Okay. Same thing had happened when, in 2016 there was a Transgenders Amendment Act which had come in. So when Transgenders Amendment Act came in, see, when we fill any form, we select the gender, male, female. No one asks us to prove it. But for transgenders, under that act, they have to basically verify whether they are actually transgender or not. So that was considered to be a violation of their privacy. And right to privacy is a fundamental right under right to life. So that can be an issue. Now, why that was contested, why let's say someone who claims themselves to be a male or a female is not have to prove, because as such, when you are a male, it's not that some benefits or some special provisions is there, but for a transgender, you may be providing that. So that is why you are evidencing whether you are a male or female. But anyway, the counter argument is there that females will also get certain benefits, but you don't have to as such give an evidence that you are a female. Now the counter argument to that is that it might very much be by your physical appearance quite evident as to you are a male or a female, right? But as far as transgender are concerned, it becomes a gray area. So if the government goes for the evidencing, the social organizations are going to criticize that why are you making them to prove that they are transgenders. If you don't go for evidencing, there can be a issue of people misutilizing the benefits that you provide under the Transgender Act. So some of the gray areas are there in that also. You can revisit that act. It will be having around its 10 years since it was introduced. Okay. Next is Pradhan Mantri Fasal Bima Yojana's expansion to cover wildlife damages and paddy inundation. Okay. So let's first understand what is paddy inundation. Now, as I said, this paddy inundation was there initially, removed in 2018. Now it is being brought back again. Inundation happening means what? Some place or region getting filled with water. Inundation means, inundation of water means, let's say there is inundation of water in the class. That means this class has filled with water. Right. Now for the paddy, earlier it was in 2015-16 when the act came, this paddy inundation, destruction of paddy crops, paddy means rice, destruction of rice crop because of water inundation was considered under the Pradhan Mantri Fasal Bima Yojana. In 2018 they removed. What was the argument? Paddy is basically a hydrophilic. Hydrophilic means a plant which has affinity towards water. Right? You actually flood the rice fields also, wherein it grows also well, as a result of which it was taken back. Right? But at the same time, the natural floods with a huge pressure and all is a completely different thing altogether. Even the paddy crops can be destroyed, as a result of which they are now reintroducing the paddy inundation criteria. If the crop of paddy is destroyed because of water inundation, because of the flood, even the rice crops will given the insurance claims. That is one thing. Second is the destruction due to the wild animals. So the wild animals can also enter the field and destroy the crops. So for that also the benefit will be given. So you've seen earlier it was there but then excluded due to difficulties in assessment. Difficulties in assessment, whether this inundation, you can have your own field which is flooded, but you may claim that this flooding is not intentional. So it becomes difficult to assess. Difficult to assess, but of course not impossible. Why not impossible? Because you will have the data of how much rainfall is there, how much inch of rainfall is there. So you can verify whether this claim of inundation of this much of field is possible or not. Okay? So about the Pradhan Mantri Fasal Bima Yojana, it is a central sector scheme launched in 2016, Ministry of Agriculture and Family Welfare. The ministry completely is in sync with the field in which it is brought in, so you don't have to remember, you will get it automatically. Now in this you have the Rabi crop, the Kharif crop and the horticultural crops that are there. Rabi crop at, I think they have reduced it 1.5% of premium the farmers have to pay. 2% of premium the Kharif crop planters have to pay, 5% of premium the horticultural crop farmers have to pay. That means what? We did the calculation of premium. So let's say the premium is coming out to be 1000 rupees per annum. 1000 rupees per annum. So out of that entire premium of 1000 rupees, 1.5% will have to be paid by the Rabi farmer. 1.5% will be how much? 150 rupees. 15 rupees. It will be 15 rupees. Okay. Now this is just an example. If the field is bigger, the premium might be a bit higher. So 2% means 20 rupees, 5% of 1000 means 50 rupees is going to be paid by the farmers. The rest of it is going to be provided by the government. Now for the northeastern states, for the state of for the Union Territory of Jammu and Kashmir and for Himachal Pradesh, the entire premium is paid by the government. Their farmers don't have to pay the premium at all. Okay? So please make a note of it. Jammu and Kashmir, the northeastern states and Himachal Pradesh. Eligibility of coverage, all farmers. It is all farmers are eligible for it. This is some statistics. So farmer application. From 3.71 crore, it has increased to about 15 crore. Right, so the penetration of insurance, crop insurance has increased. Now these are non-loany, 20 lakh to 5.22. So this is from 0.2 crore, it has increased to 5.2 crore. Loany and non-loany, this is the overall data, this is the non-loany data. Now what is the significance? Now whenever a farmer is taking a loan under any government scheme, they have to be first insured under the Pradhan Mantri Fasal Bima Yojana. If you are not insured, you will not get the benefit of cheap interest rate provided by the government of India under the interest subvention scheme. So you will have to go for it. But here, by talking about the farmers which are non-loany, they have not taken any loan. So that means it is not mandatory for them to apply for Fasal Bima Yojana, but still a lot of farmers still are applying for Pradhan Mantri Fasal Bima Yojana because of its benefits. That is what it signifies. Risk protection under Pradhan Mantri Fasal Bima Yojana, floods, droughts, cyclones, hailstorms, landslides, unseasonal or extreme rainfalls are there. Cotton crop requires 100 days plus of sunlight, right? At that time, if you have an uninformed or let's say an unseasonal rainfall, it is going to get destroyed. All those things are covered. Risk protection, post-harvest, this is important. Post-harvest losses. Post-harvest losses within 14 days of harvest. Post-harvest losses within 14 days of harvest. So once you harvest, you have to store it, right? That storage can be destroyed because of calamities, because of any XYZ thing. So up to 14 days, post-harvest losses are also covered in it. Is that clear? Yes. Any questions? Remember one thing over here, this that is there. What is this? Hailstorm and landslide. Hailstorm and landslide is a localized criteria. Localized criteria means this criteria is available only in certain regions. So for example, you have places like Uttarakhand, landslides are quite common. So in Uttarakhand, landslides, under landslides, your crop will be insured. In Maharashtra, landslides are not that common. So in Marathwada district, landslides are actually not present. So depending upon region to region, landslides and hailstorms are added over there. Maybe in future you can say that hailstorms may be added very generically because of extremity of weathers. You see hailstorm anytime. In Maharashtra also many times hailstorms have been there. Maybe landslide is not that relevant. It can become, but this can become more relevant for every kind of geographical region because of the climate change. But these two things are localized in nature. It is not applicable pan-India. Floods, droughts, cyclones, unseasonal rainfall applicable pan-India. Wildlife damage applicable pan-India. Okay? Yes. Prevented. This is important. Prevented sowing. Now prevented sowing means if the farmers cannot sow despite incurring the cost. Despite incurring the cost means the farmers have bought the seeds, the farmers have bought the fertilizers, the farmer has incurred some amount of cost. Now it is the time to sow the crop, right? So it's the time to sow the crop, but while sowing of the crop, there is natural calamity, there is man-made calamity, there is extremity of floods, because of which the entire weeks the farmer was unable to sow. In such a scenario, the farmer will be given 25% of the claim amount. I think 25% of the insured sum, because the farmer was not even able to sow the crop. If that situation arises, 25% of the insured sum will be given to the farmer. Okay? Clear? Next is Tier 2 bonds. Okay? Tier 2 bonds is basically related to the Tier 2 capitals that are there, right? So there are, if we take a Tier 2 capital, first let's understand what is Tier 1. Tier 1 capital is basically the disclosed capital that is there. Your own money which is disclosed, it will be in the form of stocks, equity, etc., which is your own money, right? Tier 2 capitals are generally more risky. they are more risky, they might be undisclosed also. Now when you talk about risky, you can have tier 2 capital, which is, let's talk about tier 1. Tier 1, for example, you have government securities. If you invest in government security, it is a tier 1. If you invest in treasury bill, it is a tier 1, less risky, right? But there are various volatile instruments as well. There can be derivatives. Now since derivatives are dependent upon the underlying commodity, there can be certain derivatives based on the crude oil prices. Now these derivatives are risky instruments, so they will be classified as tier 2 capital because these are risky capital. These are risky capital, and the RBI are not going to approve your investment in tier 2 capital for SLR. So if the bank invests in tier 2 capital, it will not be eligible for keeping that as an SLR. But if you invest in tier 1 capital, the bank will be eligible for SLR. So these are the benefits you get when you invest in tier 1 capital. Then why do you invest in tier 2 capital? For getting higher returns, but it will also come up with more risk. Is that clear? Now the thing is, when you talk about the Basel norms, you have a requirement of how much? Basel norm 1 said 8% is what have to be kept aside as a capital adequacy ratio. 2 also said same, 8%. But when it was 8%, RBI said, boss, keep 9% aside. Then Basel norm 3 came and said that you have to keep 9.5% aside as capital adequacy ratio. Now out of this 9.5% has to be aside. 4.5% has to be kept aside as tier 1 capital. Rest of the 5% can be your tier 2 capital. Now let's understand the difference of this. Tier 1 capital, which is available with you, it is the disclosed income, it is more stable, it is less risky. This tier 1 capital will be liquidated when you are facing some problems in your working capital. You are not making profit. That's when your tier 1 capital can be liquidated to save your bank, to save your organization. Tier 2 capital is generally used when you are actually going bankrupt. When you are actually going bankrupt, then even this will be liquidated in order to pay to the creditors that are there. Okay? So this news basically talks about banks are now actively issuing tier 2 bonds to strengthen their capital adequacy ratio under Basel norms 3. Strengthen their adequacy ratio means you are seeing a tendency when the Basel norm said minimum 4.5% has to be tier 1. The banks of India had anyhow a higher percentage of tier 1 capital. Let's say for example 6%. Now the banks are trying to have only bare minimum of tier 1 capital and issue more and more tier 2 capital. Is that clear? More and more tier 2 bonds. So that we basically satisfy the requirement and the rest of the 5% is completely in tier 2, which can help us also generate more money. Is that clear? See, this is bound to happen. Why this kind of turn is bound to happen? Because our repo rates are down and now the RBI is saying since the inflation is at an all-time low, it is going to come up with further rate cuts. So if it comes with further rate cuts, the traditional rate of interest and the instruments are going to yield less and less of returns. So we'll go towards more and more alternative funds, more and more tier 2 funds. Okay? So we might see this kind of change happening. So see, total issuance are expected to be around 25,000 crore in the financial year 25-26. As I said, these are subordinated debt instruments. Of course, this is for supplementing their capital because the total capital adequacy ratio is 9.5%. So they have to supplement their tier 1 capital along with the tier 2 capital. If a bank wants, the bank can have completely tier 1 capital also. Okay. Anything else? Key features. The bonds are generally capital market. They generally have a high maturity period. We have taken the example of sovereign gold bonds, 8 years, 5 years you can withdraw prematurely also. So these are generally long-term instruments. That does not mean that for lesser duration it cannot be issued, but generally for the longer term is what it is issued. One more important thing is, yes, when I as a bank have issued a tier 2 bond to you, that means I have taken money from you. So in a way you are the creditor of the bank. You have given me credit. But if the bank gets bankrupt and the assets get liquidated, you will be coming later in line. The tier 2 bond holders, after the depositors, senior debt holders, all the general creditors are liquidated, only then the bond holder will get the return. Okay? Of course, they will rank above equity holder. Everyone ranks above the equity holder. So this is a very simple thing. Why everyone else ranks above the equity holder? Because an equity holder is the real owner of the organization. Coupon payments, it provides in the same regular interest payments. Regular interest payments means like the normal bonds. So like the normal bonds, the interest payments will keep on coming to you. So these are normal bonds. Opposite to the normal bonds are zero coupon bonds. Zero coupon bonds do not pay you interest, they pay you interest at the very end. So they are issued as the normal bonds. They offer, of course, a higher coupon rates. That is why people are investing in, but they will also come up with more risks. Clear? Any questions? Yes? Yes, any questions? Nothing? Enjoyed the class? Yes, any questions? Chalo, let's solve these questions quickly. With reference to IRDAI's Bima-Gram API, it enables real-time digital validation and village level mapping of insurance policies. Yes, it was piloted only with, see, whenever only is there, more often than not it is incorrect. However, not always. Okay? So 2 becomes incorrect. When 2 is incorrect, C is the option. It aims to reduce dependence on manual documentation. Absolutely yes. Next, which of the following correctly describes RBI's floating rate bonds? B. They are linked to market-based benchmarks. So as they fluctuate, they will also fluctuate. As far as they can be issued only to, no, in fact, they cannot be issued to non-resident Indians. Okay? Next, DP rules. Persons with disabilities are no longer grouped with children for guardian-based consent. That is correct. They have been removed. The revised rules provide detailed illustrations. No, it does not provide detailed illustrations and differentiations. So again, 2 is basically incorrect. Rules now align more closely with the principles of the RPWD. Yes, it does. Because 2 is incorrect, it does. But still the illustration, the detailed illustration, the type of disability, the degree of disability, etc., it is not mentioned at all. And see, this is actually a challenge. You know, you have recently certain cases wherein people faked also their disability. People fake their disability and they become civil servants. Huh? Do not have to name them. But yes, of course. Okay? Right. Next. The government has expanded Pradhan Mantri Fasal Bima Yojana to include new risks from Kharif 2026 onward. Kharif 2026 onwards means the Kharif 2026 season onwards. Not only for Kharif, for all the 3 types of crops, but from the Kharif 2026 season onwards. Crop insurance due to wild animal attacks, yes. Damage to paddy due to inundation, yes. Losses, yes. 1 and 2. Post-harvest losses within 30 days, no, within 14 days. Okay? Sure. Is there another question? Oh, I forgot. Yes. Tier 2 bonds are issued by banks to strengthen their supplementary capital under Basel III norms. Consider the following statements. They form part of the bank's supplementary capital. Of course, the sentence itself says it. They are repaid before senior debt holders in case of liquidation. No, they are not. They typically offer higher coupon rates. Yes, 1 and 3. Okay? Yes. These are the other topics that are mentioned. Wholesale price index slips into deflation. Very important. You know, UPSC, when it asks questions with respect to the trends. So wholesale price index has been in inflation since the last 5 years. Incorrect. because it has gone in deflation. So very important for your prelims. Regulating cryptocurrency in India, what should we do? This is a thought topic. Efficient water management in India, important again for mains. Index of 8 core industries, very important for your prelims. You should know what are the 8 core industries: steel, iron, refinery, crude oil, coal, cement, fertilizer, natural gas. Okay? National Gopal Ratna Award. Prelims, what changes are planned for the Plant Variety Act? In the last class, we have seen the Plant Variety Act. So what changes have been planned? You can have a look at that. Okay? Yes, any questions? Chalo. Okay, then. Thank you guys.